Welcome to Informed Investor. If you've been keeping an eye on the stock market lately, you've probably noticed something interesting. Steel company stocks have been on a bit of a roll. Shares of major steel players have been surging on the back of the government's recent decision to impose a 12% safeguard duty on select steel products. The Nifty Metal Index also witnessed a surge of 1.2%, with the biggest gains coming from Hindustan Zinc, SAIL, TATA Steel, JSW Steel and several other steel companies, as you can see on the screen. So what's going on? Why the sudden rise? Let's break it down. So basically, the DGTR, or rather the Directorate General of Trade Remedies, which operates under the Trade Ministry, has proposed a 12% provisional safeguard duty on the import of specific steel products for a period of 200 days. This temporary tariff aims to protect India's domestic steel industry from the adverse effects of rising imports, particularly from China, South Korea and Japan. The measure was recommended after an investigation initiated back in December 2024 that revealed that cheap imports were causing serious harm to local manufacturers. This 12% safeguard duty applies to products like hot rod coils, cold rolled sheets, metallic coated sheet coils and color coated sheets, but excludes stainless steel and aluminum coated steel. But why has the government imposed this duty? Now, the main reason to impose this duty was to protect Indian steel manufacturers from the increasing volume of imports, particularly from those originating from countries like China, South Korea and Japan. Now, here's the thing. The imports of low-cost steel has been affecting smaller Indian mills, forcing some to scale back operations or consider layoffs. Despite India being the second largest steel producer, it imports steel from China as it offers steel at super competitive prices. In fact, India's steel imports from China hit a 7-year high in the first 9 months of the financial year, with South Korea and Japan also witnessing an increase. Now, all in all, the safeguard duty is more like a shield to protect and prevent serious injury to India's steel sector and ensure its competitiveness amidst rising global trade barriers. Now, let's discuss the impact of the proposed 12% duty. The most notable impact was already seen on the share prices of steel companies like Tata Steel, SAIL, JSW Steel, which have surged following the announcement. This is due to the factoring in of higher profitability of these companies and lesser competition from cheaper imports, boosting confidence. The duty is anticipated to limit excessive imports, leading to a stabilization of domestic steel prices and an improvement in the profitability of local producers. Additionally, the duty will offer much needed relief to Indian steel makers, enabling them to stabilize operations and retain workforce. Furthermore, the Indian Steel Association has been lobbying for such measures since December 2024. The duty could help restore balance in pricing and demand while supporting India's ambitious infrastructure projects like highways and housing initiatives under programs like Make in India. Now, following this, brokerages have also expressed a positive outlook on the Indian steel sector and companies following the announcement of the safeguard duty. Emkay Global is neutral to positive on the sector in the medium term, citing factors such as GDP growth, rising consumption and low per capita steel usage in India. They also believe that the global trend towards protectionism could make India less influenced by Asian steel prices, providing a more stable domestic market. Morgan Stanley, on the other hand, estimates that a 10 to 15% safeguard duty could significantly boost the EBITDA of Indian steel companies. SAIL could see a 20 to 40% rise, JSW Steel could see a 15 to 20%, Tata Steel by 20 to 22% and Jindal Steel and Power by 6 to 15%. Additionally, Nuvama noted that for every 1,000 per ton increase in flat steel prices, it could boost FY26 EBITDA by 7 to 8% for SAIL and JSW Steel, 5% for Tata Steel and 4% for Jindal Steel and Power. Not only these, but other brokerage firms like CLSA, Nomura and several others have given positive outlook on steel companies and have upgraded to their FY26 earning estimates. Now, to conclude, the government's decision to impose a 12% safeguard duty on select steel products is a game changer for the industry. It not only protects domestic manufacturers from cheap imports, but also sets the stage for a more self-reliant and competitive steel sector. Also looking ahead, the Indian steel sector is set for strong growth driven by robust domestic demand and government infrastructure initiatives. While the safeguard duty offers near-term protection and promotes capacity expansion, the industry's long-term success will hinge on sustained demand, strategic investments in green technologies, and a balanced policy environment that supports both growth and sustainability. Now moving on, let's look at some other important market updates. Recently, sugar stocks have rallied up to 35% in a week amid tightening supply concerns. Shares of Uttam Sugar Mills, Balrampur Chini and Dalmia Bharat Sugar led the surge, driven by 16% drop in India's sugar production and revised estimates of 25.9 million tons for the season. A 7 to 9% quarter-on-quarter rise in sugar prices is boosting profitability, while ethanol demand is set to improve with the government's push for higher blending. Now secondly, to tackle the ongoing challenges, Tata Motors and Kia will hike prices across their passenger vehicles lineup from April 2025, citing rising input and supply chain costs. Kia's increase will be up to 3%, while Tata Motors has yet to disclose details. This follows Maruti Suzuki's 4% price hike announcement. With PV sales already under pressure, experts warn that consecutive hikes could further dampen demand. Now moving on, NTPC Limited plans to issue 4,000 crore worth of unsecured non-convertible debentures through private placement on March 20th, 2025. The NCDs carry a 7.26% annual coupon rate and will mature on March 20, 2040. The funds will be used for capex, refinancing and general corporate purposes. Next, Vodafone Idea shares surged nearly 5% after launching 5G services in Mumbai. The company, in partnership with Nokia, has deployed AI-driven network optimization for enhanced performance. Moreover, Vodafone plans to invest 50,000 to 55,000 crore over the next 3 years to expand 4G coverage to 90% of India while rolling out 5G in key areas. Additionally, the company has also raised 26,000 crore in equity to accelerate capex and is in talks with Starlink for satellite connectivity solutions. Lastly, EdTech unicorn PhysicsWallah has confidentially filed for a 4,600 crore IPO with SEBI, including fresh equity and OFS. Backed by Westbridge, Lightspeed, GSW and Hornbill, it raised 210 million in 2024 at a 2.8 billion valuation. Now in context, back in November 2022, SEBI introduced confidential IPO filings, letting companies privately submit documents to protect sensitive information from competitors until they announce their listing plans. Now having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.